Hello and welcome. Today we're going to talk about price volatility. Hopefully, we can inform you on some of the key factors that determine some of these reasons for volatility. So, historically, first of all, owning strategic metals as physical assets has proven to be profitable. It's a profitable investment. Here's an interesting fact. If you bought strategic metals every, say, January the 1st on every year since 2010 and held them for a minimum of 3 years, you would have received, or you would be receiving, positive gains. So, as an example, what I mean is if you bought January the 1st, 2010, 2011, 2012, and every year since, and held them for a minimum of 3 years, you would be seeing profits. So, if anybody wants to check that out, you could go to our website and look at our historical pricing. Now, the two most important things to know before purchasing any rare earths, technology metals, also known as strategic metals. I'll just use strategic metals today so we know what we're talking about. The first thing to know is that there is a unique winning investment strategy that we will always share with you before you invest. And if you're aligned with that strategy, please come and join us and win. If you're not aligned with the strategy, please don't. And we mean that, with the utmost respect. We just want clients who are aligned with the strategy. So, what you'll take advantage of is that there are sort of scarcity-driven price increases. Now, something else that's worth mentioning is owning strategic metals. It's the same paradigm as owning precious metals, insofar as the private investor physically owns the underlying asset. However, and this is what we're going to talk about today, there are some key differences that all potential clients should be aware of that make the decision to owning strategic metals a little bit more strategic, shall we say, just for want of a better word. I mean, it's a good idea. It's a more strategic decision. So this week we're going to hopefully inform you and educate you a little bit about price volatility, and of course about the factors that determine the prices of these valuable commodities. I mean, if you look at AI, AI runs on data but relies on rare earths. However, rare earths, sometimes the prices are subject to strong fluctuations. And we're going to explain today that behind that are global developments and what this means to you as a potential buyer. All in all, I think it would be safe to say there's 5 factors that determine, that can influence the prices, or that do influence the prices. I mean, rare earths are purely supply and demand driven. They're not correlated at all to the stock market, so there's no interference or illegitimate interference, if you will, purely supply and demand driven. However, rare earths are now the front line of geopolitical decisions. Proof of that is, the Trump administration's interest in Ukraine and the rare earths there. Greenland, make no mistake, it's all about, the resources that Greenland has as well. So we know for sure that they're critical to all nations' economic prosperity. Let's use China as an example. So China uses subsidies for rare earth magnets, which are needed in electric cars. So to cover the expected increase in demand for these raw materials, the Chinese government can increase production quotas, which they did in 2023 by about 19%, in order to to keep these prices stable. So the country, China, determines the amount of rare earths that individual companies have to produce, these so-called production quotas. Also, in other countries such as Germany, the demand for electronic cars fell short, or has fallen short of expectations. This was partly due to government purchase incentives, which were just temporary, but also the slowdown in the growth of e-mobility is seen. I suppose it's not necessarily a decisive reason, but infrastructure. The infrastructure is not there yet, and that's why the demand was low, and with a relatively low price. So another example of how political decisions can influence prices is the various export requirements from China. So including, as an example right now, for germanium and gallium and rare earths. So the People's Republic has imposed export restrictions. They're justifying this regulation, saying it's citing national security. So back in the summer of 2023, China introduced export restrictions for gallium and germanium. Last year, then it went to rare earths. So as a result, the prices rose very sharply in some cases and continue to do today. So that's one factor. Geopolitical decisions, heavy localized production. Excuse me. So another area would be new technologies. I mean, these are the technology metals of the 21st century. So demand for these raw materials can literally skyrocket when they're needed for new technologies. So this is particularly the case in emerging areas such as artificial intelligence. Gallium arsenide, for example, is required for high performance chips. Powerful computing chips are now so central that they've sort of become part of a trade conflict between the US and China that has been going on since about 2018. So in addition, rare earths and a range of other technology metals are necessary for producing industrial robots. So we're seeing we will be seeing, higher performance robotics. So with robots, they're sort of increasingly taking on sort of physical, so strenuous, monotonous tasks, or they require sort of very constant high precision. So the demand for these future technologies will likely increase and also drive up the prices of these raw materials. So that's the second one. The third one would be where there can be supply disruption and supply bottlenecks. One example could be, global trade routes are obviously the backbone of the supply, but they can be susceptible to a crisis or a conflict. One current example would be the attacks that we had by Houthi rebels in the Red Sea, been going on for over a year. Recently, maybe had stopped, but ships had either taken a diversion via the southern tip of Africa, with longer transport routes and additional fuel costs, or they pay significantly higher insurance premiums to pass through the area despite the danger and not to be left holding the bag for possible damage. So both are very cost intensive and lead to a shortage of goods, at the destinations. So these disruptions to supply chains and rising costs could impact commodity prices in the medium term. Another example of supply bottlenecks is where we have very, very highly localized production. China would be a good example, produces 98% of the world's gallium, and China at the moment is restricting the export of gallium, particularly aimed at the US, but export restrictions nonetheless. Now, another area that can determine is, and we believe we're heading into the phase of what we might call strategic stockpiling. So the industry is building up stocks of the most sought after raw materials to secure, the long-term future. So this happened in the summer of last year when rhenium, for example, uranium is needed for aircraft turbine blades or also industrial catalytic converters. So some companies replenished their stocks and others sort of followed suit. So this chain reaction led to a short-term price increase of up to 24% within a few weeks. Another example was after the coronavirus pandemic. Many companies, aviation, space exploration, you could say as well, air transport, basically needed to reorganize themselves with, the stocks of raw materials such as hafnium. So, during COVID, it's when all the orders came back from Boeing and stuff after COVID. So hafnium, for example, ensures that turbines are more resistant to heat and corrosion. So there was a boom in demand in 2023, and as a result of that, the price of hafnium skyrocketed. I think it went up 200 and close to 250% in about 18 months, and we haven't seen it at that price level since 2012. Another area that needs to be considered are security, not just geopolitical decisions, but security situations, conflicts and wars. Um, Unfortunately, the number of conflicts and wars seem to be increasing, and nations are obviously arming themselves. In Europe, the focus now is going to be on defence. There's a rearm Europe budget. I think something like 800 billion euros will be invested in security and resilience. The plan is to aim toward military armament and security infrastructure in all of Europe. So this is very material intensive, both these sectors, likely to also increase demand for individual metals. Germanium, for example, is indispensable in military equipment such as night vision goggles. The increased demand has already been reflected in higher prices since the summer 2024. In fact, in March 2025, the value for germanium was 37% above the previous year. The export restrictions for gallium mentioned under political decisions also impacted the pricing. So we expect more countries to increase their defence spending, which could give the market even more momentum. In fact, the UK just announced yesterday huge plans over the next 10 years, massive investment. So developments in the commodity markets show that when the volatile prices are often the result of geopolitical decisions. So this dynamic can be an opportunity for buyers of strategic metals as tangible assets. So we'll leave it at that for today. I hope that was helpful, and we'll be back soon with another video.